Hello and welcome to Markets Weekly. I'm Zohaib Fazal, and over the next few minutes, we're going to talk about the market behavior in the last week and the expectation of the market in the coming week. The market started the week on a buoyant note with a lot of market participants expecting Nifty to take all-time high. And it went very close to that, and from there came a wave of selling. On Wednesday, Jerome Powell, the Fed chairman, came out with a very hawkish commentary stating that the inflation is still well above the comfort zone of the Fed and he expects 2 more rate hikes by end of the year. The surprise rate hike by the Bank of England also dampened the mood of the investors. It increased the rates by about 50 basis points from 4.5% to 5%. And then there was another news in the market regarding the US regulatory probe on the Adani Group with respect to the Hindenburg allegations. All these definitely dampened the investor sentiment, and on Thursday and Friday we saw a wave of selling in Nifty as well as in Bank Nifty. The FIIs, which was quite optimistic on the Indian markets, pouring in a lot of money into the Indian stock markets, also turned bearish by selling about 350 crores worth of shares, with the DII selling about 600 crores worth of shares, 600 or 700 worth of 700 crores worth of shares. Taking the net institutional sell figure at about 1050 crores on Friday. However, from a monthly standpoint, both FIIs and DIIs are net buyers in the markets, with FIIs having bought about 7,000 crores worth of shares and DIIs having bought about 6,000 crores worth of shares, taking the net institutional buy number at about 13,000 crores. With all those news, what is the expectation from the market in the coming week? The markets are expected to consolidate, and the reason for that is that now 18,800 is going to act as a very strong resistance for the market, and it's not going to be easy for the markets to break that resistance. However, on the lower sides, there are a lot of support zones for the markets, considering the kind of rally that we have seen in the last few weeks. It offers quite important support zones, which in most cases should be respected. The first support will come at about 18,600 odd levels, and if that gets broken, then we have another important major support at about 18,350 to 18,400 odd levels on the Nifty. So 18,350, 400 levels on the Nifty and 18,800 on the upper side is a trading range that we can expect for the coming week. With that in mind, let's move on to the final section of our video, where we are going to share one strategy that will help the market participants to make some money. But before sharing the strategy, let me be very honest that I'm not a SEBI registered analyst. All the views that I expect or share with you are my personal views. It depends upon the research that I have done, and I'm nowhere a registered agent of SEBI, so you need to keep that in mind and follow the strategy in case you understand the risks that come along with the derivative selling. Now, coming down to the strategy, as mentioned, that Nifty is expected to be consolidating over the next 1 or 2 weeks, and from that perspective, we would expect the market participants to take a short straddle of about 18,600, and we expect you to take the short straddle for the month of July, because that's going to give you enough comfort over the next couple of weeks, even if the markets make a little bit of a violent move on the higher side or on the lower side. That will give you a cushion to absorb such volatile market behavior. The expectation from this trade is that as soon as you make about 1.5%, 1 to 1.5%, and we expect you to make that over the next 1 week, you should be coming out of the trade. We expect that the market participants should not be quite greedy because the markets will be extremely volatile. Considering the kind of uh, the rally that we have seen, we would not even be surprised if we have a very strong sell in the markets, even though we have strong supports, all the way down. So from that perspective, the market participants can take a short straddle of 18,600 for the month of July and hold it for about a week to week and a half. And as soon as you make 1.5%, you might be requiring a margin of about 1,20,000 rupees to 1,30,000 rupees. And if you make about 2,000 rupees on the trade, you should be moving out of the trade. With respect to the stop loss, if you make about 1,000 rupees worth of loss on one lot, we expect you to basically come out. As well, if the market moves beyond 18,750 levels on the upside or 18,500 levels on the downside, 18,450 levels on the downside, then even though you might be in minor profit or you might be in minor loss, we expect you to move out of that trade because then there is a very high likelihood that the markets may not respect the support zones as well as the resistance zone. That's all from my side. Thank you all for watching the video, and good luck for the next week for your trading. Thank you and take care. Bye bye.